So look, we're delighted to join you this afternoon. We've got a really great mix of perspectives on the panel today. We've got a combination of life and health insurance, we've got a general insurance perspective, and also an investor perspective. So that'll give us lots of different sort of angles to cover Insurtech shaping the future of insurance this afternoon. I'm going to kick off by asking each of the panelists just to do a brief introduction. Briefly mention what their role is, but more importantly, just to give you their one key takeaway, their one key message they'd like to leave you with around how Insurtech is shaping the future of insurance. And I'll ask Al-Noor to kick off, please.
So I'm
the microphone.
No, I'm going to forget this. So I'm the Chief Digital Officer at the Pru, and the one thing I'd like you to go away with is how this disruption is allowing us to go back to the basics of insurance. So what we're moving from is from just protecting, when unfortunate incidents happen, to actually prevention and postponement. So we're actually flicking the model over. So by looking after the health and wealth of our customers, they're better off and we're better off. That's really the turning point. And digital really helps us do that. And that's the big disruption that allows us to do this term.
Great. Thanks, Al-Noor. Julie, your perspective.
Sure. So, hi everyone. I'm Julie Batch from IAG, the Chief Customer Officer, and I look after Customer Labs, which is a division of IAG that kind of brings together all of the capabilities required to build a customer experience and deliver that through to the customer. So, including, digital technologies and so on. So, similar, we're a property and casualty insurer, and we would say that we were shifting from, as Al said, from prevention to prevention. In the P&C space, we're talking about assurance. So instead of coming in after the event from an insurance point of view and rectifying the situation, how do we actually move our value proposition to the front of the customer experience and actually help change the trajectory of risk? I would say the point that I would like to make is the biggest impact on that are these things. So it's not on, don't worry, it won't go off. But the biggest impact is actually the role that mobile digital technologies are playing in changing the velocity of risk. And I think it'd be great to explore that today.
Thank you, Julie. William, your perspective.
Sure. Hi, everybody. It's an honor to be here. My name is William Fung, and I'm the co-CEO of AMTD Strategic Capital. For those of you who don't know us, because we are relatively new, I'm sure we are a Hong Kong-based full license financial services company. We do capital markets and advisory. We do asset management. We do corporate insurance brokerage, as well as direct investments. And on the direct investments part, we spend quite a lot of our efforts looking at FinTech or tech-related investments. I think in terms of one key takeaway that I want to share with you guys is I think FinTech or technology or Insurtech, it's we need to keep an open mind, right? When we look at investments, we actually look across various areas and we try to learn from different companies and different partners that we work with and see how we can improve our job or improve the services that we provide to our customers better, try to build an ecosystem around it. So I think keeping an open mind is quite important for us.
Thanks a lot, William. So the way the Q&A is going to work is I'm going to start off asking the panel some questions around the theme of how changing risk profiles and changing customer risks are being embedded into how they're thinking about underwriting and how they're thinking about kind of proposition and service development that's moved from protection to prevention. So we'll start off with some questions around that. There are audience questions, so please do use your app and vote on the question that you would like to be put to the panel as well. And at some point during the conversation, if I think the panelists like the question, I'll put it to them. And we might stray slightly off topic occasionally as well. But we'll kick off talking about the core subjects at hand then. And maybe, Julie, if I start with you and just really get your perspective on how it is you're keeping up to speed with risks that are changing your customers' lives, and then how you're thinking about service and proposition development off the back of that.
Sure. So I think if we look backwards around the way that insurance companies have developed products, we've pushed products out to customers at scale. a common thing that we sort of recall are how many new products have been launched by insurance companies over the last couple of decades, and we can call out cyber, and then before that everybody pauses for about 15 minutes, and then maybe they call out directors and officers. So actually the trajectory of the insurance industry launching new products and services up until this point has been really, really slow, and it's often been in response to global trends rather than trends that are really driven by the customer. So when at IAG, when we think about the changing nature of risk, we're really looking at the way that technology is giving us a different perspective on the actions that our customers are taking. Previously, we've gathered that information through, many legacy systems, highly disconnected and disaggregated sets of data. And today we're able to get information, as I mentioned before, through mobile technology, and that changes the way that we think about risk significantly. So we're moving from annual cycles of retrospective views of actions that were taken, so demographic-based information coupled with claims knowledge, into really understanding the way that customers move, the actions that they're taking in real time, which we've never had before. And that poses some really fundamental questions in the construct of an insurance product. So questions around the time basis of risk. So a static risk today and a risk that around movement, very, very different than it might have been in the past. It raises really interesting questions around the deployment of capital. So capital is deployed annually in annual cycles. If you're understanding the way that someone's interacting with their asset, whether it's a motor vehicle or their home in real time, you can really start to change your pricing equations, but that requires a complete rethink of the way that we think about capital and return, and Al and I were having a little chat earlier, also the way that we reserve. And those questions, I think we're just on the cusp of considering.
Yeah, great. So thanks, Julie. Al-Noor, maybe could you bring a life and health perspective into that question, please?
Yes, I think I keep forgetting to do this. So, in Singapore, we're in the right place, as it were, to answer this question, because the government is terrific in not only the support, but the intellect they bring to the table. But at the Prudential, we've always really been all about the customer in a sort of heart sense. But now, the volume of data available for someone's life and health, right from sort of almost at the fetus stage all the way through the other end of life, and also the wealth indicators and so on. The sheer volume of data is so big now that we have to use artificial intelligence to make sense of it.
Yeah.
And certainly, so just to give you a simple example, if we're tracking someone who has had a stroke, the first 30 minutes are absolutely crucial. If you can just get to them in the first 30 minutes, you not only save someone's life in a proper quality sense, obviously you then encourage faster recovery, everything else. So this whole idea about tracking someone's life fully, end to end, of course with the customer's permission, is really what will de-risk. I will get instead of just a simple longevity table, etc., which we've been used to doing, which every actuary is working on. Now suddenly the thing changes, much more data. What do we do about portfolio risk versus individual risks? Things like that all come to play.
Yeah, great stuff. So you've triggered another question around how insurers are actually shifting customer behaviour and shifting risk, which I think we'll come back to in a second. But William, maybe an investor perspective on the extent to which you're thinking about how insurers are addressing customer risks and changing risks in your thinking around investment decisions.
Yeah, sure. I think obviously client centricity is quite essential in everything that we do. And I think our client base, that they're looking for solutions, right? And the problems or the issues that they have are becoming more complex and more complicated than before. With the help of technologies, they can do a lot more things. They're expanding faster, right? They're walking further. So we want to obviously be alongside of our clients and help them to solve even more complicated and more complex issues. I think with the help of technologies and some of the companies that we have invested in, for example, we have invested in obviously AI technology, right, to understand the customer behavior better, right, and to be slightly ahead, 1 or 2 steps ahead of them, right, before the issues come. We can already come up with solutions for them, right, or try to preempt potential issues with AI technologies. We've invested in, for example, a P2P lending platform, one of the largest in China. They do loans, student loans, car loans, mortgages. I think in the near future, right, potentially we can see whether we can onboard insurance policies, for example, right, crowdsourcing, crowdfunding to lower the cost for our clients, and also to diversify risks for the investors that look at these products. So I think with technologies, we can do quite a lot of interesting things.
I mean, that triggers a question around, which links to Julie's point around changing capital profiles. If you're looking at a kind of P2P insurance model, the P2P investors will need to have utmost transparency of the risks they're investing in, and actually they're probably investing in shorter tail products and propositions than they were before. Julie, could you build on this kind of capital deployment piece and just talk us through how your views on how you're deploying capital are shifting to meet these changing risk profiles?
Sure, I'll try. So
not in a detailed.
Well, I don't know that we've quite figured it out yet, actually.
Yeah.
So if you look at long tail risks, so accidents, bodily injury, and so on, we'll often, the Australian market for motor bodily injury, we'll carry capital against those risks for 8, 9, 10, and sometimes longer number of years, because the uncertainty around, the way that the injuries will manifest over time is unclear. In property and casualty, it's a much shorter time frame, obviously, as many of you would know. So we sell policies on an annualised basis, and we probably hold capital against those policies for, 12, 15, 18 months. If you're selling a policy based on a trip, so one ride or a moment in time, we've got a couple of policies at the moment where we sell nightly cover. It's a product called Share Cover. We sell nightly cover against the commercialisation risk of your home if you put it on a sharing platform, like in Australia, Stays or Airbnb. That's one night's worth of risk. We carry almost no capital for that, almost no capital. And that really changes our pricing equations. It allows us to price risk very cheaply in unit-based, based on units and use. So we have less access to need to access the capital market. So sorry, William. But also what it means is that we are far more open to disruption than we've ever been before, because in my opinion, capital in insurance is a significant component, a significant barrier to entry. The need to carry, large amounts of capital against these extreme and long duration risks, and reducing the time and the risk velocity reduces the need to carry that, and therefore opens competition, which is why you'll find companies like ours looking actively at how we disrupt ourselves and think differently and embrace Insurtech or whatever vertical you want to put in front of the word tech you like, to try to change the way we do things.
So that kind of changing competitive landscape you're talking about is definitely bringing fresh investors, fresh capital into the sector. Al-Noor, just really interested in your take on this, particularly because you've got an investment background going back before. What do you think the sector needs to do to be attracting very different sources of investors into the sector at a time the sector is rapidly changing?
I think you're attracting people anyway. I mean, like the combination of Tencent, Alibaba, Ping An into Zhong'an and so on. I think it's attracting anyway. But you're quite right. We need to just modernize in the true sense of the word. So I think we've now got the best of both worlds. We can stick to our longevity tables, things like this, if you want to. We also have the ability to insure you personally, fractions of a time, or, for example, Jungan sales policies for not only the trip, but just the time the plane's off the ground. So you can time it as sharply as you like. So I don't see this as, I think avoiding people coming into the market will now be a problem. But recently, the regulatory capital needs and so on have been a real burden for all of us.
Yeah.
But as we go through and get these new technologies, I think we can price it much, much more sharply. And then perhaps, we haven't figured this out yet, but perhaps argue the regulator to actually judge us on that rather than just on some long forgotten tables.
Absolutely.
Because as people's lives are getting longer and they're better treated and so on, we might be able to argue our case.
Yeah.
Might.
Okay. So we've talked a bit about changing customer needs, changing capital. I'd like to shift it slightly now to talk about the changing needs of talent and employees within the sector. And William, maybe kick off with you. When you're looking at a business to invest in and a team that you're investing in, what are the sorts of traits that you're looking at for in that team, particularly as it relates to the insurance sector?
Sure. Obviously, the management team is very important, right? And of course, any proprietary technologies that they have developed, also that's important. But the management team, the vision, right? Whether the management is in it for the long haul or just, developing someone and hope someone to come in and, get rich and then move on to other things, right? Obviously, whenever we invest in any companies, right, we want the management team to stay, right? And to be honest, you don't want to fund them the full way, right? You want to fund them in phases, right? So that they're always, eager to improve, right? So you don't feed them everything on the first day. So that's, obviously the management team, right? It's quite important, and technology really.
Okay, great stuff. And Julie, what are your perspectives on whether we've got the right mix of talent in the insurance sector today to be able to succeed?
So in our team in Customer Labs, we have kind of 4 principles that we recruit for, which are openness, diversity, which we define as diversity of thought, and diversity of thought tends to take care of the other, factors of diversity. Truth, as in let's not kid ourselves with false metrics and let's make sure that we can measure everything we do, and ethics, so an ethical approach to the way that we use data. We've got in Customer Labs everybody from creative marketers to digital designers to coders to data engineers, and that brings a range of different people to the table. We've got an incredible amount of insurance knowledge in our company. What we're trying to do is bring in disruptive entrepreneurial thinkers that still have those qualities around them, those that I outlined. So, we've picked up people from creative marketing agencies, from online media companies and so on, and we're trying to just bring different thinking to the table to challenge us, combine with the best insurance knowledge that we can find and build new creative crazy things for our customers, and it's a pretty exciting place to be actually.
Okay, brilliant. And Al-Noor clearly being able to whoop is like number 1 on the Pru Singapore talent list, but what are the other factors you're looking for?
Well, I'm pleased to tell you the Singapore team doesn't need any encouragement, and they are the new breed. Yeah. Looks like the whole of Singapore is a new breed.
Yeah.
But to answer your question more exactly, even though that was the truth, I think culturally we are risk averse, right? So when you talk about digital and FinTech, and you talk about failing fast, and all these words don't mean anything to a person who's been trained to make sure they don't take any risk. So that may sound too simplistic, but that's actually a big deal. Educating people to want to try new things quickly because the regulator doesn't like the notion. Again, thankfully, because we're here, Singaporean authority encourages it. Yeah. But overcoming those things is one issue. But in terms of their behaviors other than that, I think if anybody thinks that the customer, the business, and technology are 3 different things and 3 different tribes, you've got to shoot them on the spot. Right? because there's no way that's going to happen. So
don't quote that, by the way.
well, hopefully nobody's listening anyway. So the whole idea behind this is people working together for and on behalf of the customer in the customer's interests, and therefore any skills, because lots of people now have technological skills, they certainly have business skills, they have customer, if nothing else, they're customers themselves. So bringing these three things together, we've found in particular locations like Singapore, and I'm not kidding you, it's a very, very beautiful thing to observe when it happens. But there's a lot of work to do yet. Okay,
great stuff. And Julie, you mentioned diversity. So the Hackcelerator this morning was awesome. The 20 businesses took away some fascinating ideas from those. But one thing that did strike me, and I know it struck you, we had 20 male CEO and founders. And given we're at the kind of genesis of the FinTech revolution, I find that slightly concerning that there weren't any female founders up there. Have you got any thoughts on what FinTech needs to be doing to make sure that actually we are getting the right diversity of talent and thought in at the early stages of the FinTech development?
Yeah, so at the risk of being a bit controversial here, because we discussed this earlier, right? I was sitting quietly doing some work and watching, I was like, wow, another man, which is great, but I'm hypothesizing that either all the female founders have already got all their money and they don't need any more, right? Which is probably the case. Or women don't need to win prizes, maybe, also possibly the case.
What are you saying about men?
Yeah. But I don't know, it's a concern, actually. I think that we've done a couple of things in IAG to try to keep us honest around those principles of diversity, to make sure that this doesn't turn into another. I won't continue. I won't finish my sentence. But to make sure that we continue to encourage and support women to make bold choices, right? So in our venturing mandate, we actually have diversity principles where we say that if, like lots of people talk about it from a hiring point of view, you've got a credible man, you've got a credible woman, which decision do you make? We've baked that into some of our venturing and incubation principles, that we need to have representation from female founders and female entrepreneurs in the things that we put our money into and in the new businesses that we build. And we're very proud. We've made about 5-6 investments from our venturing fund. We're very proud that 2 of them, so we're still only hitting the normal metrics, but 2 of them are female founders in Australia doing some absolutely amazing things. And we as an industry and, women, we have to be bold. We have to put ourselves out there so that what happened this morning, which is still great, so I'm not, still great, isn't the norm. Okay. And we should go for it a little more, I think.
No, totally agree with that. And I'll let the applause settle down. So in terms of diversity of thought, William, we were talking earlier about needing to bring ideas from different sectors into insurance. And you touched on that a little bit earlier. Do you want to expand your thinking on that, please?
Yeah, sure. So as we were just discussing, right, I think there's definitely things we can learn from different businesses, different people running the businesses, and different technology, and see how we can make our jobs better, easier, and also help our clients to lower the costs and stuff like that, right? So as mentioned, just going through a few investments that we've made, I've talked about a couple of them, P2P lending and another AI. We've also invested in a large online auto car company, a rental company in China that has, obviously a little bit of a synergy with our business, because auto car insurance, it's a big theme in China, right? And we've also invested or looked at a company in the education business, dissemination of information, timely disinformation of information from the local government to the schools to the parents, and to the kids, right? And how they can develop technologies to make sure that the information gets to the right people and get disseminated. I think that's also something that we can apply in our business. For example, when we send out notices or send out important information to our clients in the most efficient and effective manner, and also to lower the cost. We've also made other investments in other areas, such as an app that can make you a little bit handsomer, right? Okay. In photos, Murray. Not that you're not handsome enough, but there's always room for improvements, right? For everybody, right?
I'll get the details later.
And other investments, right? So I think we're not just focusing on one sector. Although I know today's topic is Insurtech, right? But in my opinion, this Insurtech is a little bit slower than other financial services areas, right? Obviously, FinTech is taking banking, with a very, very firm grip and driving banking into a very different world than what we used to know. But I think Insurtech is still at a relatively low starting point, and there's a lot of things that we can look at and see how we can improve in that. But we do tend to look at various different things across different areas, and then see how we can fit into our ecosystem, and and challenge ourselves in what we do, right, and be a little bit more innovative. So we don't just look at one thing and see, okay, we want to focus on that, but we do look across various things and try to learn from everybody and see how we can apply that technology or apply that thinking into what we do.
Yeah. So William is setting down a challenge to the Insurtechs out there to accelerate the pace of change, which I'm sure
or come talk to us.
Or come and talk to William. So building on that theme a bit, Al-Noor, we're seeing sectors converging around technology increasingly. So are there particular sectors or ecosystems that you at Prudential are looking into moving into, which are kind of just broader than your old traditional insurance value chains?
Yeah, look, I think it's inevitable. I mean, we talked about health and wealth, and once you cover those two areas, that's extremely broad.
Yeah.
Because it covers things from doctors, clinicians, nurses, the whole thing, to banks, payments, It's a problem trying to define the boundaries of such a thing.
It is, yeah.
So clearly it does need an ecosystem. It does need someone who handles partnerships really well, which insurance companies don't. So it's going to need all sorts of things. We've made a start. There's a long way to go, but I think we need those skills. But certainly it's going to be an ecosystem play. And we're more interested in the Chinese ecosystems because they really are the future. The American ones are very good, but I mean, if you look at just look at the figures from Tencent today or yesterday and Facebook and so on.
Yeah, remarkable.
Platform plays are here to stay, and the broader and more far-reaching, the better.
Yeah.
So the boundaries are a problem, not if. It's, yeah.
Absolutely. And Julie, your take on that? What ecosystems are you particularly looking at?
So we're kind of going a little bit to what insurance is, which is a relationship between, particularly in P&C, it's the relationship between people, assets that are important to them, and the environment. So that's quite broad. So we look a lot at, okay, what's important to help understand people with health and well-being, its needs, and so on, its finances, so similar to Al-Noor. But if you then look at the assets that are protected around motor, that takes you into a very, very broad mobility ecosystem. Yep. Around home, there's an incredible amount of opportunity in the home space if you think about insurance as being just one factor. And they're the kind of places that we're exploring at the moment as we sort of think about how we can be more relevant in the lives of our customers.
Okay, great, thank you. You've just touched on something. I'll make a quick plug. Have a look at KPMG Mobility 2030. Got some fascinating views on there of how we see the mobility ecosystem completely shifting from travel to mobility. I think there's huge fundamental changes for the insurance market coming through that. We have a tie on question. No, we don't. Blockchains. No, cyber has just overtaken blockchain. So let's. I'll see if any of you want to take this. You can put your hands up. Whoever goes first. How do insurance companies act against cybersecurity risks? Anyone want to first stab at that?
So do we, to the person asking the question, do you mean insure them or respond to them?
I think respond.
Okay. So probably the same way that many companies do, which is not that well at the moment, actually. So we have vast data stores that are often disaggregated in multiple places. We've got legacy technology, and a lot of the work that we've been doing is about creating the right protection for that and the risks of our customers around privacy and so on. You know, there's IAG as an organisation is, you know, more than 100 years old. So we've got data on almost every Australian. So it's a combination of how are we putting the right security in place, but then also the right privacy protection and helping make sure that our customers' information, which is often very sensitive, is not exposed. The way that we are responding to it more broadly, we obviously offer a cyber product to outside of our organisation. It's a product that I think needs a lot of work. So it basically provides a limited amount of coverage to kind of mid-market players, if you like. Small businesses are really not very well protected by cyber insurance today. Large corporates, where most of the risk resides. And what we've been doing is looking, actually using the word ecosystem, around how we build out.
Are you running out
is
of battery?
Is it working? Or maybe running out of batteries? That's probably a sign, right? How we actually build out an ecosystem that allows us to provide more services to our customers. So whether it's about helping them with detection, prevention, risk assessment, and then actually what's the product that comes from it. And some of our venturing fund investments have been in that space as well.
Okay, great stuff. William, is the cyber insurance market a market that you're looking at investing in at all? So I know there's a lot of cyber insurance Insurtechs out there that would want to talk to you. So.
Or hackers out there. Hello. We are looking at something related, but not exactly cybersecurity, right? We're looking at data integrity, which is somewhat similar, right? There are a lot of we were just at a dinner yesterday, and we were talking about one company without naming it. They do some pretty interesting things. Obviously, there are a lot of contracts and policies in a lot of things that we do, right? When we buy a house, or when we buy insurance, there's policies, or when we do a loan, there's loan docs, and it gets passed around multiple departments, multiple people, multiple organizations. But from where it started to where it ends, there may be human mistakes or whatever, or people try to change some of the terms of the documents, but you cannot track who actually made the change.
Yeah.
Right? It's difficult given that it could be different companies, different countries, different regions, different time. It's a little bit of a mess, right? But with these technologies, it kind of is a seal, right? When someone breaks the seals and try to take stuff out or put stuff in, change stuff, right? It gets identified who did that, right? Then obviously, that person has to explain, right? If there's a legitimate reasons, fine, right? If there's not, then there could be a crime in place, right? So there are stuff that we're looking at, but not exactly cybersecurity, but more about given that we're quite living in a world where data is very important to us, and we need to mine those data. So data in, garbage in, garbage out, right? So data integrity is quite important. So we're looking at some stuff like that. Yeah.
Okay, great stuff. And Al-Noor, is cyber something that comes into your thinking in your life, wealth, health propositions at all? Or are you leaving that to the P&C insurers?
No, absolutely. I mean, in fact, I think it's a worse problem for us in a way, or a bigger problem. But we know how to tackle it, I think. But anything from IoT devices in the healthcare business all the way through to tracking critical things like strokes and heartbeats and so on. So I think security becomes even doubly important. But there's a couple of generic approaches which we don't have time to talk about, but it's vital. So anything digital, clearly cybersecurity is just part of the furniture. As it were. You don't build it in, then
it's just a core competency that everyone has to make in now.
Absolutely.
Yeah. Okay. So we're going to go to another question. This is now shot to the top. Bots, not brokers. AI, not actuaries. Discuss, please. Would anyone like to take that first?
Okay.
Julie seems to be going first again. Yeah, go for it.
I might have to. Sorry, thank you. Okay, so I'll start with AI, not actuaries.
Are you going to offend any actuaries in the room?
Maybe. Hands up if you're an actuary. So I would love to be an actuary. I would love to have that last bit of the mathematical equation in my brain. But fortunately, I'm surrounded by lots of very smart people that can, help us get to the end of the equation. I think that the actuarial profession is one that has been fundamental to insurance for such a long time, but is in real need of change. And that is not a criticism, it's an opportunity actually. So often from the actuarial profession there's very similar exams, there's very similar trajectories, there's very similar pay systems and approaches to decision making that are for people who are incredibly intelligent. And I think there's a real opportunity to branch out of the thinking and look at how disruptive technology and open source coding applications can help the actuarial profession. Well, it's all happening. Can help the actuarial profession really shift and move forward, because I do think that it is that our models, our reserving models, our pricing models and so on are prime candidates for automation and machine learning. And in fact, we have just revised and released a whole new set of pricing tools within IAG for our larger commoditised portfolios, more commoditised portfolios at scale, where we're now using real-time machine learning algorithms in decision making for pricing directly through our digital channels. And that is that a 5-month piece of work replaces about 150 people that would previously have taken 3 months to update rating tables and so on and so on. So I think the rise of AI will continue, where our industry is a data industry, and that there is no better profession to tackle that than the actuarial profession, but it's going to require some relearning and some rethinking of the approaches. Happy for someone else to take the bots question if they want to.
Al-Noor, do you want to touch on bots, or you
look like you want to
continue the AI, not
Yeah,
actuaries?
I'm sure we do. We've done it, right? So the bots question, I think the question is misplaced in a way, because it's not either or.
Yeah.
And there's an awful lot of people who use ATMs in this audience, or mobile payments and so on. Mm-hmm. Nobody says that means cash is dead. We keep wishing it, right? But I think people do what they prefer. Is one answer, but also it allows the brokers to be more efficient, allows the brokers to not do mundane things like keep checking KYC or answering basic questions like how much my policy is worth, things like this. Now at the extreme end, there are lots of people who just would wish to do it completely digitally. We also have to cater for them, right? So I think they're both ends. And pretty much you can imagine we'll be in the middle. But bots, I think we already deployed in the Prudential. You can call them up now. We're finding about 80% of the calls get to the bots.
Okay.
But that, I think, just means we haven't got enough volume of business. And as the cost of business goes down, business increases tremendously. So at present, though we're the biggest by far in Asia insurer, we think we have lots and lots of room to go. So I think we'll make use of all of our weapons to get there.
Okay. And something you said triggered another thought, which is the saying that new habits are really easy to learn. Bad habits are pretty impossible to break. There's a lot of bad habits in the insurance sector, which is slowing down the adoption of some of these new technologies. I guess maybe sort of take each of you in turn. William, when you're looking at a new business, are you looking at businesses that are purely greenfield and aren't encumbered by legacy, or are you looking at a mix of the two?
Probably a mix of the two, right? Maybe it goes back to some of the previous topic, right? I don't think technology is going to replace human, right? Or at least not in the near future, right? I think technology can help humans to do our jobs better, right? Or some of the more repetitive work, paperwork, that can be replaced by technology, that could be replaced by AI, robots, and allowed human to do more value-added tasks, right? I think that's probably where we see technology coming in, right? Not robots replacing humans, but allowing humans to use the robots to do better things, to do greater things, right? So I guess when we look at different businesses, we're kind of looking, a mixture of both, right? How human and technology can blend together and have a better product, rather than just looking at something that is totally non-human, right? Especially in insurance, as Julie touched a point, and also in finance in general, right? It's still very much a people's business, right? There is relationship involved, right? There is going to be human behaviors involved, right? So I don't think human can be taken out of the equation. But having said that, right, I think robots, AIs, technology can play a very important role in this equation, but still with human in it.
Okay, thanks, William. And Julie, what are you doing to break some of the old habits and bad habits at IAG?
Yeah, I mean, I think Al-Noor kind of touched a little earlier on the risk-taking mentality, actually. So if I look at our business, and people say that we're risk averse, it's crazy, right? We've got people taking hundreds of millions of dollars worth of risk every single day, but they do it within a framework. So with a set of rules that may or may not have been written by the organisation, they may have been written by reinsurers, they may have been written or influenced by someone's historical bias. You've got exclusion sets and so on to control risk in an organisation. What we're trying to do is challenge a lot of those boundaries. So if you have a think about machine learning and bots and whatever it is, a lot of these things are being trained on data sets which include those biases, and those biases may or may not be right for the future. So we're trying to look at where bias exists in our information, what's driven that, and how we might take an ethical approach to artificial intelligence in the future. That's something we're very, very focused on at the moment. We feel that if we don't do that now, it may be too late. In our organisation as well, when we look at things like product development, so we've been fantastic at building, huge scalable products and pushing them out to market. Generally, that's taken us a year or so to do. We're now looking at rapid prototyping, minimum viable product, in the same way that startups are market fit, incubators, innovation labs, and all those kinds of things to try to force us to think and take risk in a different way than that controlled, thoughtful way that we've done it in the past, which has permitted us to be, grow to the size of organisation that we and, my colleagues' organisations are today. So it's around challenging, thinking differently, doing it ethically, and then bringing a little bit of disruptive thought into the organisation talent that we talked about earlier.
Okay, thanks. Al-Noor, anything to add to any of those statements?
Look, I think anywhere where there's change, as this is an age-old problem, this has nothing to do with digital or Insurtech, but from Machiavelli's days to now, you just got to make sure people you are asking to change somehow benefit from the change. What you don't want to have happen is people you're asking to change are the ones who suffer, and the people, the beneficiaries are. So that's one thing we are doing here is just the social context of change. So in Singapore, those of you who know, we got a brand new office last week, just opening up, which the DPM opened.
Congratulations.
So when someone sees the office look different, that's just one of the variables.
Yeah.
When they start working with data they haven't worked with before, etc. I won't go on, but you need to attack the immune system with many, many viruses, I call it, right?
Okay, yeah.
They have to exceed at least 8 before we change. But when I can see positive signs.
Excellent. Thank you for that perspective. There is a very stubborn question that keeps bouncing back to the top here, which I can't ignore now. And I think we have to start with you, Al-Noor, on this one. And you may pass it on if you want. Can you see practical applications of blockchain in life insurance?
Yes. Life insurance, we haven't actually done it, but we have done insurance. So one of the biggest applications is when you're going outside the organization, and basically smart contracts, if you like, where people there's a long chain of events, and you lost track of the beneficiaries, things like this, right? I think it's going to be particularly useful.
Okay.
So when things last a long time, I think it's a fairly easy application to think about. The difficulty is you need enough critical mass so that your blockchain is actually followed by everybody else. Otherwise, you're sitting on your own with a special currency called KPMG currency.
Yeah.
And the other guys don't.
Yeah. Be very valuable currency, though, KPMG currency. Yeah. Julie, William, anything to add to the blockchain question in insurance? Or actually, if you want to go wider than insurance with blockchain, with life insurance?
Sure. Obviously, it's a very big topic right now, right? Blockchain, everybody, associate blockchain with Bitcoins and where it's trading and how much it's gone up. But I think blockchain, it's more than that, right? It's about improving efficiencies. It's about, cutting a lot of the steps in between and make the process a little bit more efficient and more effective. So I think it's to be honest, I think it's a much broader topic, right? Obviously, it can apply to a lot of different things, but as far as I know, I'm not aware of any specific, blockchain ideas for insurance. Not that I'm aware of, right? But I think it's a much broader concept and definitely can apply to insurance. Yeah.
Okay. Yeah, there are a number, but I'm going to move the conversation. We've got 3 minutes, 52 seconds left, and I just want to touch on one final thing before we wrap up, which is I think in the last few years, insurance has done a lot of experimentation, lots of proof of concepts, lots of minimum viable products. I'd be interested in each of your perspectives on how do we go from proof of concept to production and scale. So if we could kind of take each in turn, just get your perspectives on that to close the conversation out. Al-Noor, do you want to kick off on that, please?
Yeah, look, I think the issue is getting a critical mass within an organization, but we have started, and we have actually gone live on a number of things.
Yep.
I'll just give you one example, which is to do with a compliance issue. We had to look back 10 years, listen to phone calls, decide whether we said the right thing, etc.
Yeah.
That's live, right? So the way we did it was use, if you like, necessity as a mother of, right? And that's probably the best. But now we move to the next phase where people want to do things. So I think we're beginning to get things more into play now.
Okay. Yeah. Great stuff. And William, when you're looking at an investment, how important is the scalability of that investment that you're looking at?
Well, certainly it's important, right? But I think we look at it at a medium to long term rather than just whether it's scalable immediately, right? We need to see the potential of it being at that stage, but not necessarily happening within the next, 6 to 12 months, for example.
Yeah. Okay, great stuff. And Julie, you get to have the final word.
Thank you.
What are your perspectives on going from proof of concept to production?
Yeah. So after kind of wallowing in the lands of no product development, cyber and D&O over 20 years, in the last 12 months we've probably put about 8 products into market, which we're really excited about. We're a premium above $10 billion company, right? So it's pretty challenging when our MVP, which we're super excited about, has sold, got 80,000 customers and we've sold $800,000 worth of insurance to get our organisation as excited as we are. So we're still figuring out the scaling piece. And that is a real challenge in an organisation of scale. And in some ways, you've got a great customer base that you can leverage these products through, but giving these things the right amount of oxygen and the right amount of attention, and then giving them the life they need is something that we're still learning. And we've got a bit of a way to go on that. So we're partnering with lots of startups. We're partnering with different stage investment organisations to try to see how other people tackle this problem. So hopefully we do have a few unicorns in the pipeline at some stage.
Excellent. Well, listen, for me, the sign of a good panel is when I've taken new things away from it. I've certainly taken away a number of new and different perspectives today. So thank you very much indeed, Al-Noor, Julie, William, and audience. Please give the panel a round of applause.